Hey everybody, how are you? It's good to see everybody here today. In case you don't know me, I'm the Mr. Potato guy from the Instagram videos and the person who says crazy things every Thursday regarding markets being predictive and manipulated. If you could please just let me know that you can hear my voice. Can you guys hear my voice okay? If not, I'll check my mic. All right, good to go. We need to throw the obligatory PowerPoint up here just so you guys can see it. If you're here for the first time, our entire premise is this idea of predictive tools. Tim said that 12:45 signal made my day today. It was a great signal. We're gonna talk all about that 12:45 signal today because it was bananas today. And if you were in my room this morning, you know that we were following a rev pulse sequence in the advanced trading room today, and we were looking for moves up at around 11:35, a move down here, and then Tim, I actually saw this as an omnia long that reversed for me right here. So if you're coming to Omnia April 15th, this was my trigger right here, but we'll get into all of that. We have a weird company here. People aren't sure what to make of us. We believe that time is the most important factor in determining market movements. It's not volume, it's not support and resistance, it's not trend lines, it's not value areas, it's not deltas, it's not candle patterns, etc., and so forth. It's time. This is and runs parallel to the thoughts of great men like William Delbert Gann, W.D. Gann, back in the early 1900s, who said time is the most important factor in determining market movements. And it's relatively easy to prove that that's the case, because if you have future times to give to people to check out, you can give it to them and they can analyze for themselves to see if the stuff worked or not. And so today's really about kind of going through that for anyone who's new and understanding whether or not we can predict what markets are likely to do. And so I'm going to log into something here real quick to actually show you that that's the case. If you give me 1 second, we published the market times for Wednesday and Thursday on Tuesday. And for those of you taking the trial, you've gone through the homepage, you've taken the video demo, you've had access to these times now for the last 2 days. And yeah, here we go. View. I found the page. Took me a minute to log in there. Yeah, here it is. So every week we give people access to market times and directions before the day arrives. It's predicated on an understanding that nothing of this magnitude with these consequences is left to chance. Banks like JP Morgan and Deutsche Bank and Goldman Sachs that are constantly in the news for fines for manipulating the market, for jury rigging the market, for spoofing the market, for using personal Snapchat accounts to communicate these things that disappear into the ether outside of regulation. These guys don't leave things to chance. And we're left sort of scratching our head. I've seen people all over the internet today and on Facebook groups. Does anyone know why the market fell apart today? Why did that drop come? I don't know. Nobody understands it because they perceive the world working a different way. They're watching non-time-based tools that are telling them everything's safe, everything's okay. The VWAP is VWAPing. And guys like me and Tim and Earl were like 1245. Here we go, baby. End of the line. And I want to talk to you a little bit more about that and show you kind of how the program works. This is an indicator for NinjaTrader. And I want you to imagine that all we have is a piece of paper, right? Imagine we're back in the 1920s or 30s. There's no computers or calculators or things like that. And imagine we look at days in a row of market movements. And Tim, imagine manually we saw that the market drops from 9 o'clock to 9:30. And then for 3 days in a row, it drops at 9 o'clock and goes up at 9:30, drops at 9 o'clock and goes up at 9:30. Can you imagine all 3 days in a row? Paul, would it be outside of the realm of expectancy? Would it be okay for us to see, maybe to have a buy stop order sitting at 9:29, ready to see if on the fourth day, the market would go down until 9:30 and then go up? Would that be a logical approach, provided we managed our risk appropriately, right? And so what the time warp software is doing is it's asking that question. It's saying, are there any times recently where these types of shenanigans are occurring? Is there any evidence of movements occurring with irregular regularity? Irregular regularity. That sounds like a disclaimer for a new drug. Side effects include headache, stomach cramps, and irregularity. Irregular regularity. Times that keep producing market moves. So when we get a chart like this for yesterday, these are all Eastern times, by the way, when your software produces that for you, it's basically saying, hey, on Wednesday, these are the moves that are continually happening lately, right? So 7:20, 9:30, 10:35, 1 o'clock, 2:35, and 4:05 are times that the program has noted as behaviorally occurring now. They're happening over and over again. And then the 5:40, 8:35, 9:45, 11:10, 1:40, so on, all of those times on the bottom are producing up moves lately. Now, there's no guarantee that that'll happen in the future. However, sometimes the moves do occur. And it's our job here today to see what happened on Wednesday at the Predictive Times. What happened on Thursday on the Predictive Times. And we have a whole basket of markets for you to hold my feet to the fire on. We can look at oil, we can look at gold, we can look at the euro currencies, the euro dollar, the pound dollar, Ethereum. We can look at large time frames for stocks like Tesla and Nvidia or SPY or QQQ. We can look from 30-second charts all the way up to daily and weekly analyses to find these irregularities, these behavior patterns that are emerging from the ether. So why don't we get right to that, and we'll take a look at yesterday. I've got 3-minute ES charts and 5-minute ES charts, and so we can take a look at either. We'll start with the 3 because there's more signals. So on Tuesday, on the 3-minute chart, we had all of these times available before Wednesday: 3:12 to 6:15, 4:15 to 6:03. And so if we kind of squish that up, can you guys see the 3:12 signal? If we look at what actually happened at these times, did it go down at 3:12, etc.? What we start to see, what emerges, are some times where weird stuff keeps happening. So all of the European session yesterday, it went down at 3:12. A day later, it went up at 4:15 Eastern. A day later, it went down at 5:24. A day later, it went up at 6:03. A day later, 6:54, not so much, but 7:06, Tim, and then at 7:42, it does go down at first. The 824 bar, though, does not. The 930 bar does not. But really cool stuff starts to happen in the afternoon. 10 o'clock, it goes straight up until 10:33. We're told to look for a move down from 10:33 to 10:51, where it should go higher until 11:15, which it does. And then the program is warning us, hey, it's 11:15. Historically, for whatever reason, over and over again lately, over the last few weeks, what does the market do between 11:15 and 12:03? The program is telling us, hey, I don't know why or who or how or what. I know when and what direction. Watch out for the market to go down at 11:15, and it does. That's bananas. How long is it supposed to go down for? Till 12:03. And then, Tim, that's kind of the pivot right there, isn't it? Now there's an intermediate move, right? And it comes all the way back down. This is Powell talking at his little conference yesterday, all of his buddies. He's like, hey, let's get together and I'm going to talk about maybe lowering the interest rates. I don't know, probably not. We're in so much debt. I gotta go. How many of you like watching the United States debt clock and everyone's just standing there going, it's okay. It's okay. We're going to lower interest rates and give away even more money soon. It's okay. No problem. How many of you have this very anxious feeling that something is about to happen? Something huge, right? How many of you remember 2020 and 2008, 2009, when this kind of volatility that we're seeing today actually kicked in? Huge moves up and huge moves down. Yeah, some of you remember. Some of you remember. The afternoon got kind of jumbled up after Powell spoke. We did have a move down from 1257 to 127. It did move up into 206. And then the 209 signal was no bueno. The 233 signal worked. The 257 signal and the 333 signal didn't. 351 into 421 did. So out of some, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 signals that went in the direction. There were 1, 2, 3, 4, 5, 6 that didn't play out. So 16 out of 22 is how much percentage-wise? 16 divided by 22 is 72%. I'm going to round it down and say 65 to 70%. And this is a number that's been consistent over 15 years. God help me, I've been doing this for 15 years. Some of you have been here with me almost all that time. Jeez. So, what was unusual about yesterday? Surely nothing like that would happen, right? We started out here. There was a report. It went all the way up and then did what? Came all the way back down. So some of you told me earlier today, you said, hey, I'm watching for that again. Let me introduce you to Thursday. Because Thursday, boy, that sure looks a lot like yesterday, right? There's our signals from 3 o'clock on. We have the times. And of course, it looks good in hindsight, but there's a difference here. I gave you the signals beforehand. Let me just pause here, because if you're watching from home or you're watching this in a video later, I want you to understand why we do it this way. Every other webinar you've sat in, some self-inflated, egotistical, narcissistic guru guy who probably lives in a refrigerator box, but he's got an old laptop with an internet connection and a marketing degree, sits there and shows you all the wonderful signals he took after the fact, right? You've all been in that webinar. I've sat in dozens of those webinars. Here's where I got in. Here's where I got out. Here's where I used my super secret recipe. Here's where I used a trend line that you're going to learn how to draw once you give me $100,000. And all my secrets will be yours. Let's try it this way. I'm going to give you the times and the directions 2 days before the trading day arrives. It's a pretty good offering. We're going to apply a basic rules-based system to it, and then add up the winners and the losers. So you're going to get the times and the directions in advance, a simple trading rule to apply to those times, and let's see what happens. Which one of those are you more likely to trust? Let's go back to the charts. There is a difference, though. Okay, let's talk about how we might apply these signals in real time, right? If we're going to analyze whether or not our little Tuesday, Wednesday, Thursday experiment worked, let's analyze the difference between signals and setups, right? A signal is just a raw piece of data like we looked at just now. From 3 o'clock to 4:30, how many of the signals actually went in the direction we were expecting them to, right? 65 to 70% of the time, the signals, the raw data, are helping us. What is a setup? Let's apply a rule to it. The rule says, hey, when we get to a buy signal in the direction of the trend, we buy. At the close of the candle is the entry. Our stop is 1.5 average true range values away from the candle. ATR, average true range indicator, invented by Wells Wilder back in the 80s. That's our stop. Sometimes the stop is smaller when the volatility is low, and sometimes our stop is higher when the volatility is higher. As the candles get bigger, your potential reward and consequently risk expands. Like elastic pants on Thanksgiving. You were a size 36 when you walked into your mom's house with the kids and your wife. You were a size 38 when you left, if it was an Italian family like ours. Like, I can't eat another thing. Dessert time, who wants dessert? You're not eating dessert? Oh. So we're buying and exiting by the next signal. Buying and exiting by the next signal. Buying and exiting by the next signal. This is infamously referred to with our super focus group tested acronym SWT, signal with trend. Boom. Everybody understand that? Pretty simple. This is what we're going to be applying to the signals. These are the rules that were included with your trial times. The next one is called a crossover. If it starts out as a buy signal under the EMA, in our case, a 120 EMA, we're going to wait for it to close above the moving average and then hold it until the next signal again. But our stop's going to be just below the signal candle, the one that crossed over the moving average from selling trend to buying trend, popping our submarine above the Arctic ice, opening a hole where daylight can pour through. This is an example of a crossover trade. The next one is going to be particularly relevant today. It's one that I think we should focus on. You see, these are behavior times where things usually happen. I was watching maybe one of the most horrific television shows I've ever seen. I've lost sleep because of this show, called The Handmaid's Tale. Has anyone here seen The Handmaid's Tale on Hulu or watched it on one of the other streaming services? This sort of Orwellian Armageddon breakdown of society. In a flashback, the daughter's having a baby in the hospital, and the mother never makes time for her. She's always super busy with her work her whole life. The mom never shows up for anything important in this poor young woman's life. And then as the baby's being born, the mom rushes through the hospital door and says, "I'm so sorry. There was weather in the airport in Atlanta. I got here as soon as I could." Completely opposite to her normal behavior pattern. Of course, everyone huddles around the baby and they're laughing and they're crying. It's a joyous moment. Mom didn't do what she usually does. She didn't let us all down again. She came through this time. A puncture trade is very much like that. If we're waiting for a selling time, this is the time where they always sell, and then there's no selling. And then a few seconds, a few minutes later, the price is still rising. Wait a minute. Maybe this time around it'll be different. Maybe the seller's not showing up at these blue times is communicating something. JP, Goldman, Deutsche Bank, they're not interested in selling right now. They're holding that weaponry back. Why? Oh, it's going to go up. Maybe it's going to go up. If they're not selling right now, maybe it's going to go up instead. And that is the genesis, the underlying principle of a puncture. If you arrive and the trend is up and there's a sell signal, it's saying 930. What does it usually do? It goes down. And then 930 plus 20 seconds, it's a little higher. 920 plus 30 seconds, 40 seconds, 50 seconds. It keeps going up. What's going on? You were supposed to do, oh, this time might be different. So as it goes against its normal behavior pattern here, we're assuming the plan's changed. Bill, Brady's in the blitz position now. Looks like he's going to throw the ball. He's been passing very few times here. He's been handing off to his runners. This will be the first time Brady passes in 14 plays. We get to 930 and they're not passing the ball. They're handing it off to somebody. So we're going to get long when it goes through the stop of the sell signal. Think of this like a breakout with trend. Okay? We call it a puncture. P-U-N-C-T-U-R-E. I'm sure British people say the word different. They laugh at how I say the word puncture. It's like puncture, maybe in Italy, I don't know. But it's a puncture trade. It's going through that stop. That stop is supposed to be the demarcation line. If this move is really going to be up, we shouldn't go through this. If this move is really going to go down, we shouldn't go through it. If it goes through it, maybe this is really a buying time. We buy one tick above the line. Our stop goes 1 to 2 ticks below or above in the other direction, the puncture candle. We hold it until the next time. Can you let it run? Can you trail it? Sure. Can you let it roll right into the next signal? 100%. But the rules I've published before every webinar don't involve anything more than that. Okay? Pretty simple rules. In fact, just to reiterate, the rules are right here. We'll be showing how the signals can be traded using one of two simple entry rules called signal with trend or the puncture trade. This video provides an overview explanation of these. Words are hard. A max 1.5 volatility stop will be used. So wait a minute. You're telling me that you've given me the times in advance, and you've given me the signals, right? Okay, and now the rules for it. So when do you exert your superhero guru-like powers and make me feel like I owe my life to you? Never. I just want you to see how markets really work. Because when you see this, it'll change your life. Let's go through all of them, shall we? Close below the moving average, 309 below the moving average, 318, we close above. Crossover trade exiting at 427, log the winner up top. 427, above, 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 no punctures. 521, we enter. We exit by 548, 3 ticks. 548, no puncture trade, trend is still up. 609, close of the candle. We exit by 633, we give a tick up. No close below the moving average, no crossovers. 651, close of the candle is 52.8250. We have until 709 to see if they push it higher. They do. 709, no puncture, no puncture, no puncture, no puncture. 739, we buy, womp womp. We hit the stop, -2. Now, here comes the report. 824, look at me. Look at me, you crazy people. 824, that candle is above the moving average. You know what I have sitting right here? Buy stop. Because that bears a haunting resemblance to an example I've been teaching you for 2 or 3 years now. Something that happens over and over and over and over again. Over and over again. And so when 824 turns into 827, turns into 830, and then that report comes out. We are long when it comes through that stop. There is no selling. JP Morgan is not selling. Deutsche Bank is not selling. Goldman is not selling. We punctured, popped through that blue line. Where's our stop go? Underneath the puncture candle. We are long here. Our stop is here along this line. How long am I supposed to hold this trade? Until the next time. That's the signal with a setup around it. Dum, 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 dum. Most traders move their stops, make their stops too big. Most traders don't let their winners run. There's a fight or flight response, a reptilian, evolutionarily derived mechanism in your head that is screaming, get out now, get out now, get out now, get out now. Banks count on this. Other people you're trading against count on this. The algorithms for companies like Top Step Trader and Apex Investing and UProfit and Earn to Trade and Lilu want you to do this. Can she have a smaller amount of risk? And when the trade is working, let it mature and develop. And ignore those impulses. That's hard. Stanley, I don't wait for anything. As soon as it goes through that blue line, there's a buy stop sitting 1 tick above the blue line. There are people in this organization that you have met who will tell you, I wait for 1 bar to close above that line, and then I wait for Jesus to come and tell me that it's okay. As soon as it goes through, puncture. Not close above and pull back to it. The simplest possible rule for this webinar is as soon as it sneaks through, as soon as it goes, hey, anybody up here? Woo! That's an $18 move. Meow. So winners up above, losers down below. Here's where it gets interesting. We enter at 912 and we finished lower by 942, down 7 ticks. Customers. I don't understand your question, Stanley. If the trend is up and you get to a sell signal, we buy and we put the stop below the candle that went through the line. There's no structure, there's no pivots, there's no swings. That's it. If you're a customer and you get to a time where it's less than what it started out, you can see originally it tries to go up, at the open, it's hesitating, and it finishes right back where it started. In fact, John Houston, it finishes a little lower than it started. What is that communicating to you? Maybe the uptrend has done what? If I finish exactly where I started by the end of my time window, or even a little less, maybe the trend is over. 942, it sells and comes down into 951. We're going to just keep going through. There's another loss, -8 ticks. 1015, there's another loss, -12 ticks. It's Friday night, but Sunday's coming. We enter long at 1109. Our stop is 1.5 ATR values away, and we have until 1203 to take the money and run. We get $6 back. Okay, the next long is at 103. We exit by 109. We get 3 whole ticks. So here's where we're at so far from the Asian session all the way to the London session. I'm sorry, Asian, London, US session. Now, I'm going to tell you this, and you're going to see on the 3-minute chart some cool stuff. At 136, we go short and we go long and it hits the stop. Now, I've taught this before. It confused some of you. I'm going to teach it again. When it's hit the stop right here, Bob, do you notice how it's closed under the moving average at this moment in time? It's closed under the moving average and it broke through that white line. If we were below the moving average and that happened, what would we be doing? If we were already below the moving average and we broke through that white dot, we would short it. Bala got it. Bala got it. I can't talk today. I can't use English grammar today. You will have moments like this where the two setups overlap. So Bala, it comes down, hits out your stop, and closes under the moving average. I can now short it right where it punctured that white line. My stop goes above that candle. The two things overlapped each other. Some of you trade this, and I'm very proud of you when you do. And now it gets ridiculous. Using the rules that I taught you, not improvising at all, you're now short from here to here. You're now short from 221 until when? Bala, we all got out early. All of us got out early. None of us could believe what was happening. All of the customers on Skype said, yeah, I was in it, but I got out too early. And my good friend, Mr. Earl, says, take profits when you can, not when the market makes you. Not when you have to. Get out when you can, not when the market dictates you need to get out now. Last trade, Stanley, is from 221 until 245. That's another $32 move. Now remember, have I improvised at all from whatever it is, from when we published? All of these times were published in advance. All of the rules were published in advance. There's even a video. I can't worm my way out of this. It doesn't matter if I'm a good trader or a bad trader right now. It doesn't matter what my executions are. Don't feel bad. Don't ever feel bad. If you made money today, Stanley, remember, people were buying this the whole way down. People were buying this the whole way down. 90 to 95% of traders were long, believing that this was just a healthy pullback the whole way down. Take a quick survey of the Facebook groups. You can hear the weeping and gnashing of teeth from here. What's the matter? What's the matter, Dad? We're not going to Disney this summer. I just blew all the vacation. All the vacation money is gone. I borrowed against Junior's tuition to cover my margin call. That's what happened today, Stanley. It's all gone. All right, so I haven't improvised here at all. And obviously today's kind of a black swan in relation to some of the stuff we've looked at. But gosh, doesn't it just take one day, right, to blow your account to a new equity high? Now, we still have signals to go. I'm not done. When the candle is white, buying signal, and it comes up here, there's this half-hearted attempt to push higher, and they do initially. And then Stanley, what happens? It's still falling. It's still falling. It's still falling. My sell stop limit or sell stop is sitting right under that line. So 52.14.50, 52.14.25, there's a sell stop resting right there. And it's tagged right there. And our stop is right above that candle. So if you made any money on here, you're up from the whole morning. Let me short this and see. When do we get out? The next time. The next time is at 3:33. There's $9 more. 3:33 until 4 o'clock, end of the ride. $8 more. Now, I regularly receive emails from people accusing me of fraud, of selling various tinctures of snake oil and lying to people. I want you to understand that I had nothing to do once these times were published. I can bring you to the web server and show you. We can audit it and see when these signals were published, right? You can see on screencast, added 3 days ago. There's the screenshot. This was today's analysis. So what part of any of this could I have scammed anybody with? Anyone? What part of any of this does anyone have any involvement in. There's no discretion. None. Any questions about this? $136 was the pattern 1. That's true. And I counted that. I put it on the wrong side, sorry. That's a loss. You're right, I put it on the wrong side. It was a loss and then it was a gain. I didn't use any patterns in this, Bob. If you traded a pattern 4 right here, the entry was here. It wasn't a loss. They weren't longs. This was a stop and reverse. This was a pattern 4 trend continuation. Do you understand why I'm telling you that? In the book that you have access to. What happens when you get to a pattern 4? What does the book tell you to do? If you are using patterns, we're not even counting patterns here. Okay, so ready? Two methods I've observed. Pattern 4, trend continuation. Use a breakout threshold below the lowest low of the 3-candle series. I recommend a 2-tick gap to use as a trend continuation level. This type of an entry can alert you to what? The next huge drop. Bob, 3 candles in a pattern 4 sequence. Candle number 1, candle number 2, candle number 3. What's the lowest low of the sequence? 52, 55, 75, minus 2 ticks, 55, 25. I enter short on the puncture of the pattern 4 breakout. My stop is above the high. If I'm using patterns, something I didn't mention in the webinar rules, I would have been short here and would have exited by the next time. So it would have been a $26 winner instead of a $32 winner. Tell me you understand that, because I don't want you to leave here thinking you were right about that. It's going to mess you up when you're trading. Acknowledge if you understood that. Page 25 of the book. Cool. What was unusual about the 136 signal, I'll go over it again. The rules overlapped. It happens very rarely, extremely rare. It hit the stop, but then it closed under the moving average, right at the puncture point. So stop right here. And now, Bob, I have a white signal below the moving average, and it just punctured the white line. The two things overlapped. And it comes right back to where I could have shorted at 52.97. So it's a pattern 1 stop out and then a pattern 1 puncture at the same exact time. If we negate that completely, if we don't include it in the results for today, let's add them up, shall we? 4, 5, 7, 25, 31, 32, 62, 67, 97, 99, 107, 117, 18. Let's call it 100 just for chuckles. If you took away that $35 winner, it's still 75 points minus these losers over here. It's still a $3,000 day if you didn't catch that weirdo right here. Okay. If you look at it on a 5-minute chart, this was yesterday, this was today. This was yesterday and today. So if you followed on a 5-minute chart, there's your puncture, long until 9:15 plus $10. Your whole day can be done there. Long from 9:15 until 9:45, first evidence that things are slowing down. Long from 9:50 until 10:05, we lose $2.50 of the 10. Now long from what? 11:10 until where? 12:45, there's 9. So plus 9, plus 10, minus 2.5, minus 1. Where do we go short? That's right. Right here. That's a crossover trade. When the candle closes below the moving average, we enter at the close of the candle. Our stop is 1 to 2 ticks above the crossover candle. How long do we hold the trade? Until the next time. That's a $63 winner. The puncture then occurs on the white line here at 11.75. We exit at 3.35 for another $4 or $5, and now 15.35 until 4.45 is another $10. Yeah, if you traded at 7.40, that was a loser. Absolutely. Hit the stop. Minus 2.5, minus 1, minus 2.5, plus 10, plus 9, plus 63, plus 4, plus 10. Using these rules. Bob, the best thing you can do is look at those pages in the book. If you listen to that video, you're going to get very confused. Do you want a copy of V4 of the book? I have a release. Debt's still going. It went up $100,000 in 3 seconds. Holy cow. We're gonna have a bad thing going on here. I'll get you a copy of my latest release. It's still a draft, but it's always a work in progress. Yeah, read this book. It tells you what to do when you get to those signals. Don't watch the video. Video's confusing. So this stuff has been happening on other markets, by the way. Here's what happened in gold today. Very similar situation. The gold times today. Here's the gold times yesterday. Very similar situation. We can look at oil. Oil on a 1-minute chart today. Right, there's the morning, small gains on the shorts. And then look at the one winner today in oil. Long from 153 until 209. It's a 94-point winner. If you traded that puncture, you were stopped out. You gave 13 back. You're long again at 219. You got 35 ticks back. Right? Puncture right here. You got another 7 ticks. It all starts to add up over time. On a 3-minute chart, it's a little clearer. Yeah. On the daily chart for the ES, you can see what the signals have been telling us for big moves for a while now. Today is an anomaly. If you're coming to my event in April, you're going to see and learn why everything is going backwards right now. April 15th, Stanley, I'm going to explain to you how we knew today was going to be a down day. This is something covered by a new doctrine I developed called omnia, which literally in Latin means everything. So if you've been getting those emails as a customer and you're trying to understand why some of the signals completely reverse in the opposite direction, we'll cover that together. But we can look at other markets, right? We can look at other markets ranging from Bitcoin to Tesla to Ethereum to Apple, all of these different things. And you can see for yourself, there's not a lot of mystery here, is there? Bob, can you see that reversal signal on the Tesla chart on a daily time frame right here, where it hits the stop, it's closed below the moving average, and now we can short it? It happens very rarely, every once in a while. Look at every place the program told us Tesla's price was going to go down. September 11th, October 10th, November 15th, January 25th, and March 4th. When's the next time? April 18th, May 24th. May the 4th be with you, and also with you. Right? Can we apply the same metrics to Bitcoin? What happens if you bought Bitcoin at those times with those stops? What happens if you bought Bitcoin at the punctures? Bitcoin futures, even micro Bitcoin futures. Look at the signal on February 25th. Got to get out by March 16th. When's the next move? April 3rd. Ooh. I wonder what it will do. I wonder what it'll do. Yeah. Does it work on lower time frames? 100%. There's a 60-minute chart today. Go down to the 15-minute chart. Squish it up. Go down to the 5-minute chart. Same stuff. Go down to a 1-minute chart. You really want to get in there. There are the times. And here's the best part. We already know the times for the future. With this program, look. All of the times are waiting for us on the right-hand side. All of them. Gold trader? Sure. When are you going to buy gold futures? 60-minute chart. There you go. Go down to a 15-minute chart if you have too big of a move. You come all the way down to a 1-minute chart if you want to scalp it. Here's the thing. Once you start to see that this is what really happens, once you start to understand the wizard is real, he is behind the curtain and he's pulling all sorts of levers and turning all sorts of knobs and shifting dials back and forth, you go, oh, I am not a child anymore. This must be how it really works. This must be why I feel like someone watches where I put my stop and then gets me to do the exact opposite. When I think it's going to go long, I go short. When I think it's going to go short, I buy. My stop's too close, it gets hit, I reverse, I get in again, I get out again, I get in again. And when you're done, it feels like 100 trades have gone by. You've been sitting there for 20 minutes and it feels like 2 days. This is why. Which way? This way. This is why. This is what they do, right? And so we can analyze and see, what do you have in store for us coming up? What do you have in store for us, Mr. Gold Chart? When does the next gold signal tell us when the run is over? May 22nd. Oh, okay. I guess I'll be looking for longs in gold until May 22nd. Risk 10 ticks every time a signal comes to see if it goes up 100. That sounds like a decent strategy, right? What if you apply this to SPY and you're an options trader? What if you had calls on January 11th? What if you had calls on March 13th? What if you have calls on April 11th and May 3rd? Because that behavior pattern is pronounced. It is occurring with regular irregularity. Regular irregularity. Call December 6th, call January 11th, call March 13th, call April 11th, call April 3rd. 2 other places on the puncture. A call here was a fail. A call here was a fail. This 3rd call was a success on the puncture. Stanley, in the webinars, I don't change anything. I leave all the settings the same. So if we go to a weekly chart on here, my settings are the same. How about that? You ever go to a weekly chart, customers? Flux Nation? Here's a weekly chart on SPY. Here's a weekly chart on gold. This is for you big gonzamakas out there that are swinging large accounts, right? Those of you with the generational wealth. This one's taken a while to calculate. Basically 10 years of weekly gold signals. It'll eventually get there. Yeah, swing strength of 8 on everything I've shown here today. I'm going to kill this chart just so we can keep moving on. But you can have this. We already have the times for tomorrow on the E-mini S&P. We already have them. They're here. Look. We have the times for Friday into Sunday night into Monday, just sitting there. There's Monday into lunchtime Monday. There's into Monday night and then Tuesday. All these times are here. They're only here because they keep doing it and hope you forget. They're here because they'll always do it because they know you don't remember. They're doing it because you have a physiological and psychological predisposition to self-destruction. You do the wrong thing every single time. And that's why the banks get all the money. So this is a map where all the landmines are buried. Some of them are duds. We trade the duds with trend. Some of them are hot. Some of them are hot, like 1245, where a bunch of our customers made a poop ton of money today. And that's my hope and desire for you. And you have to ask yourself, if you're listening here today or later watching these videos, what do I want? Experientially, now that I've seen this as possible, You have to choose. This is a red pill, blue pill moment, to borrow from pop culture. Do you want to watch indicators and price action tools and candle things and trend lines that tell us what already happened? It's in the past. There's a reason, though, I think these things are called futures. What's the signal in the future? What's likely to happen 5 minutes, 5 hours, 5 days, 5 weeks from now, based on patterns that they don't want you to remember? You have a choice. Do I want to react or be proactive? I've learned in my relationships with my family, my spouse, reacting in an argument is bad. Proactively deciding, hey, I'm going to be an active listener. Proactively deciding, I'm going to talk less. I'm going to give myself a 30-second window to absorb what's being told to me, as opposed to, oh yeah, well, ever since we got together, you leave your socks all over the place. That's reacting. It's bad. There's very few things in life where reacting works out. And I think banks know this. I believe they know this. I love this graphic. I think it summarizes trading. I think it communicates what everyone here is trying to do every day, right? And those of you that think that you can hack away at it because some guy on a Facebook forum or a Discord showed you he had a great day today and he didn't use our stuff, go back and ask him how he's doing a week from now. You assume that this is impossible. You assume there's no way this can work. Well, it's a zero-sum game if all the banks are in on it. How does that? Oh. You trade the way you trade because of the assumptions that you've made. Stephen Covey wrote the book, 7 Habits of Highly Successful People. And he said, we all make these assumptions and we live our lives according to them. You're trading because of beliefs you hold about the markets. Here's what we believe. The golden rule. The ones with the gold rule. This is how most of the people I meet that call me trade. Well, my zero leg stochastic told me it was going to go up today at 12:45. It was overbought, but it had potential to go even higher. Yeah, how'd that work out for you? Well, I had a significant high percentage delta at the VWAP at the third derivation today over there. And that was a very strong buy signal here into the afternoon. How'd that work out for you? This is how our customers trade. All right. These bastardos are getting ready to short it again. Let me risk a little bit to see if I can get in that window. Let me risk a little bit to see if my order gets sucked in with their orders on the way down. And I'm going to hold on to that thing as long as they've held on to it lately. That's the difference. That's your choice. Which one do you want to do? I love this graphic. It's one of my favorite. We want to be part of your team. If you're going out there alone, oof, it's rough out there. We've built you an amazing car. We have teams of experts here, traders that are doing great, that are helping other customers with mentorship. We've got developers, we've got people working with automation. All of those things are here. And we want to be a part of that team for you. You win battles by knowing the enemy's timing and doing something the enemy doesn't expect, which is what? Believe that it's happening. If nothing else today, please believe that this is happening. Please believe that it's happening. Ask yourself, how could this person have faked what happened? He had the times in advance. He had the signals and the setups in advance. And it's $3,000–$4,000 in 2 days worth of trading. How do I get it, you say? Please tell me. Sweet mystery of life, I've finally found you. Step 1, go to the website, backtothefuturetrading.com. Step 2, click on the product store, which is going to take you to our product page. And the one thing we're talking about, the starting point for all of it, is Tachyon Warp. Step 3, click on the Learn More button, which will take you to the Warp page, and scroll on down. Right here is your Willy Wonka orange ticket. Come with me and you'll be, and when you click on it, you're going to see a thing pop up. I host an advanced training room. It meets Tuesdays, Wednesdays, Thursdays. Me, one of the founding fathers of this crazy endeavor. I've been doing this for 15 years. I've forgotten more about time than most people will learn here. I have very simple setups and rules that we follow. I demonstrate our force signals. I demonstrate our warp signals. And we have a $200 daily goal, a $400 loss limit. And we start at 9:30 and we're usually done by 10. We'll keep practice trading until 11. If you want to be a part of that, it's $199 a month, basically 1 day worth of our goals every month of the 20 days we're together. If you don't want that, fine. Don't want you either. It doesn't matter. You don't need it. No worries. There is a purchase agreement. Keep in mind, all sales are final. This is guaranteed to work when you get it. Do not try to steal the code. Remember, you can lose as much as you have and more. And then don't be a jerk. Don't write nasty emails, abusive emails to the staff here. If I see you write really mean things in all caps with exclamation points to Rachel, yeah, you're not going to do well here. Then when you get here, there's a place to put a promo code W lowercase ARPOFF. WARPOFF. And if you hit apply, it's going to take $500 off the price. It's a lifetime license, all updates included once you purchase. Indicator for NinjaTrader, all sorts of ways to get data for NinjaTrader without using it as your base platform to trade from. Video training archive, as well as a community of people now in a Skype group that are sharing their results and their successes and failures with each other. Right now, there's 231 people in our Skype group for general BTTFT stuff. And they come in here and they talk about what's working for them. They're sharing their setups, going over what they're doing. That's available to you as well. So we have a community of users that are working with each other, and I love that part of it. Any questions about this? Any questions about anything I've gone over here with you today? When we look at this, I want you to remember the times are available for tomorrow. They're available for Monday, Tuesday, Wednesday, and Thursday of next week right now. They're sitting there like ticking Jack Bauer time bombs. Just waiting for that moment to occur when all the algorithms fire off. Yeah. So if you know that it's possible, if you know these things are available, if you know that you can know these times in advance and 6 or 7 times out of 10 the stuff works out, why wouldn't you want to know? Why aren't you tripping over yourself right now to punch those sweet little credit card numbers in there and join a group of crazy people who believe markets are rigged? No one is coming to save us. Congress is in on it. The Senate is in on it. Every administration since administrations existed is in on it. Nancy Pelosi is not the only person in the world who's getting in right before NVIDIA goes long. It's on both sides. In my state of North Carolina, the senator here sold all of his stocks the same week he was advised by Homeland Security about what was coming from COVID. All of the people on the committee sold all of their stocks the same week they got the notice about COVID. No one goes to jail. No one pays a fine. Business as usual. In a way, when you get the software, you're kind of cheating alongside them, aren't you? You're sort of co-conspirators in profit. But if those are the rules of the game, I think those are the rules we should play by. Thank you for your time. Thank you for your patronage if you're here today. Make sure if you're an Omni or registrant, you come to the live event tomorrow at 9 o'clock for the pre-training. And if not, please accept our thanks and gratitude for your support. You help us reach other customers out there and get them on the path to profitability. May the wind be at your back. In all sincerity, may the wind be at your back. May the sun shine upon your beautiful faces. May the mountains lay low before you. May the valleys rise up to meet you on your journey. I wish you peace, health, prosperity, all the things you want for yourself. We agree with you in the fullness of the capacity for those things. We're on your side. I won't lie to you. I'll tell you the truth. It's not all roses and Wonka bars. There's drawdowns, there's plateaus, there's moments where the world is upside down and nothing works. But we're just looking for a statistical edge, something to hang on to over hundreds and thousands of trades that gives more money than it takes away. And if you believe that's a solution we can provide, we would love to have you as part of our family. Blessings to all of you guys. I'll see you tomorrow, ladies, as well. Thank you for all that you guys do. And be strong out there tomorrow. May your profit targets get hit. May your stop loss limit orders never get touched. Virgins by the end of the day. And keep going. You're doing great. You learned a little more today than you did yesterday. Imagine where you're going to be a few days, a week, a month, a year from now. I believe in you. I'm proud of you, and I know you can do this. I believe in it with you. Have a great evening. We'll see you guys soon. Take care. Bye-bye.